Giving no surprises, the Reserve Bank of India today maintained status quo for the fifth consecutive time. RBI Governor Shaktikanta Das said MPC decided unanimously to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility rate and the bank rate at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting the growth.
The Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility, that is MSF rate, and the bank rate at 6.75%.
On the growth projections, Governor said India's GDP growth remains resilient and robust as reflected in the projection of 7% growth in the current year.
Real GDP growth for the current year, that is 2023-24, is projected at 7%. I repeat, real GDP growth is projected at 7% for the current year, with the third quarter at 6.5% and the fourth quarter at 6%.
On the inflation front, Governor said significant progress in bringing down inflation has been made. The steady decline in core inflation indicates that monetary policy is working. He also warned that CPI data for November is expected to be high.
CPI inflation is projected at 5.4% for the current year, that is 2023-24, with the third quarter at 5.6% and the fourth quarter at 5.2%.
In other decisions, RBI raised the Unified Payments Interface payment limits for hospitals and educational institutions from 1 lakh rupees to 5 lakh rupees per transaction. RBI also decided to allow reversal of liquidity facilities under both SDF and MSF even during weekends and holidays with effect from 30th of December this year. Now, this is an important announcement so far as the banks and the liquidity situation is concerned. RBI will also offer a cloud facility for banks and financial institutions that would enhance data security, privacy, scalability, and business continuity. The industry has welcomed the announcement and hailed RBI for maintaining stability.
So I think keeping repo rates unchanged for 5 consecutive periods is good because it gives stability as far as people who are borrowing. So rates not going up is a good sign.
Emphasizing on the possibility of the resurgence of inflation, RBI has for the 5th time not made any changes in its key policy rates. Also, RBI has given a clear indication that price stability is the priority. With camera person Gaurav Kagra, this is Shyama Mishra for DD India, Mumbai.